What's up, guys? Just doing this quick video on the strategy I use. This is the only model that I use, strategy, setup, whatever you want to call it. This is the trade I took on Monday. If you can see, we're here at market open. You can see we have these equal lows below us. So let's see. Market plays out. We take out this buy side liquidity up here. And we're just looking for some imbalances, some fair value gaps, something. You could say we have this here or this here. But these are just, they're not really good fair value gaps. We're not looking to take anything off those. We're looking for a pretty obvious fair value gap. So we take out these equal lows here. Don't really have a setup off this liquidity sweep. We get more displacement, right? Still nothing. Don't really care about this fair value gap. Again, it's not a good fair value gap, not obvious, right? It's not like a beginner couldn't see that, right? It's not something obvious. All right, now we have this obvious fair value gap, right? We get another liquidity sweep here with a fair value gap, which is what we look for, right? When trading this strategy, right? Now we would want to see this fair value gap get inversed, because a lot of beginner ICT traders will look to short off of this, right? They'll look for something like this, which is not the strategy I use. I wait to see this fair value gap get disrespected, right? It's the opposite of what most traders do. Now you can see we continue down, right? And we come back up into this fair value gap. And like I said, we're looking for it to get disrespected, right? Now you can see here, this fair value gap gets disrespected. So we'll be looking for some areas of liquidity to target, right? So you can see we have these internals, right? And then we have this external up here that we could be targeting, right? So let's say I enter my buys. Now, how would I manage this position? The way I would manage this position is I'm going to set my full take profit up here. And I'm going to take partial take profit, right? I'll take my first partial. I'm going to take out 25% of my profit or my position at this level right here. And then when it hits this level, I'll also move my stop to break even. So at that point, it would be a risk-free trade. Now, when we come up to this internal liquidity here, I'll take out another 25%, right? And then I'll take out the other 50%, the rest of my position, when we get up to this final take profit, this external liquidity. And the reason that I do this is because if we take out this internal liquidity, we should, in theory, continue all the way up to this final take profit if this is the draw on liquidity. Now, if the current draw on liquidity is only this internal liquidity here, then we'll just reverse off of it, right? If I'm right and the drawn liquidity is up here, this external liquidity, then the break even shouldn't even get hit. So the break even's meant to save us. Now, what will I do for a stop loss? I personally don't use hard stops. You could put a hard stop below this swing low here, or even this. Now, this would be a negative risk to reward. This wouldn't be, but I personally wait for a close below. Now, I would have to wait for the candle to close below, the same way I waited for this candle to close above for the inverse. So I could guesstimate, let's guess it could close like about here, let's say. So that would leave me with a 1.37 risk to reward ratio on this trade. Now let's continue to see how this trade would play out. Now you can see we hit this internal liquidity here. So I'll look to take out 25%. So let's say I take out 2 contracts here, right? You can see it took it out down here, but it would have been up here where it took it out. So now we're out 20%, right? We secured some profit. Now we move our stop loss to break even, right? So now it's a risk-free trade. We've secured ourselves some profit. Now let's see what happens next. If I move this to here as well as this, right? We got our 25% and break even. Now let's see what happens. You can see we're coming back. We almost get stopped at break even, and then we go right through our target, our second target, right? Our 25%. So we close we closed 3 contracts here. So that's 50%. We have 5 contracts left for this full take profit here. Our stop loss is break even. Oh wait. Stop loss, our take profit is up here. Stop loss is break even. Now, let's see how this trade plays out. We have 50% of our profit secured. Stop at break even. This is I'm already up on the day on the account. Now, if I lose this trade, it's fine. If we win, it's fine. Now you can see we smashed right through our full take profit here, and we are up on the day with a 1.3 risk to reward ratio. Up on the day, secured our profit. At this point, I'd be done for the day. No more trades. Go enjoy my day. Go hit the gym. Go get some Chick-fil-A, you know. This is a really good demonstration of this strategy. That's going to be it for this video. Leave a comment if you guys want some more demonstrations of this, more examples. If you have any questions, let me know in the comments. If this helped you, please subscribe. Yeah, leave a like on the video to help my video in the algorithm or whatever. So, thank you guys for watching. I'll see you in the next video. Peace.